a lot of commonalities that I can make out. For instance, Neuland Labs, which is the top stock in all three categories, has done fantastically well. I am looking at the weekly chart of Neuland Labs. In January 23, the stock was at 1300 rupees and it is now at 12,740. This has been an awesome return, Aditya. Just tell us a bit about your stock picking framework. What do you look at? I mean, this is a 10 bagger in less than 18 months. What is the success behind such wonderful stock picking?
So, the first thing that comes to our mind, when we are investing into smaller companies is how is the character of management and whether they have, significant proof of creating wealth for shareholders in the past. So if you look at Newland in particular, if you look at the COVID low, for example, the stock is already up, 50x from that COVID low. The stock price
Yes.
was 250 rupees. And the
Yes.
stock is obviously trading at, northwards of 12,000. So the first thing is that, we want to see significant proof that this company has done well in the past. Second thing that I am witnessing, I have done small cap investing for last 20 years, and what I have witnessed is that, and this is a story of, any credible small cap in this country. When you start your business, first 10 years go to solve for, unit economics and financing. Next 10, 15 years go in terms of, establishing yourself well with your customers. But once you are established well with your customers, next 15, 20 years, you go in terms of reaping for a reward. So what is very, very unique about Newland is that it is perhaps one of the only pharma companies that I know of in this country, which has not had experience of, failing a US FDA inspection, which to my mind is very, very unique because all the large cap companies, be it Sun Pharma, be it Cipla, most of the companies have had this experience. So what is so unique about Newland? It was started by Mr. D.R. Rao, who was the head of QA/QC at GSK, and that is the DNA of the company. The second thing that we are witnessing across most of our companies is that they are very, very high in terms of innovation index. And when I say that, the total addressable market for a lot of these companies is expanding at a very, very rapid pace. A case in point is Newland, wherein right from the dossier filing for a innovative biotech in the US to identifying the API and then scaling that API from a lab scale to commercial scale is what Newland does. So our view is that with the biosecurity bill, which is slated to, which has already been passed in the US, this company is going to have massive tailwinds going forward. And the good news is that if I look at the API industry in India, the market size is $4 billion, and China API industry market size is $40 billion. So even if a fraction of incremental China plus one has to move, it will benefit players like Newland. Obviously, they've got very strong credentials. So when we identify companies, our mantra has been fairly simple, and it is divided into three parts. What we essentially say is that we won't overpay for greatness if we are buying a great stock
You
in the
will not
portfolio.
overpay.
Yeah. So one of the things that I've learned in investing is that if I look at, Microsoft globally or Nike today, if I look at HDFC Bank or Kotak Bank, 5 years of practically zero returns, what we essentially say is that every great company goes through, 3, 5 years of zero return. And that is a time wherein we would like to invest into great businesses because we believe that, great businesses gain more market share in a down cycle. So we don't like to overpay for greatness of a company. Instead of that, and this is very counterintuitive, obviously, we will wait for these great companies to underperform in the stock market because business cycles are very different from stock market cycles. And the second mantra for us has been if we buy good versus great at a discount, we'll always buy it at a discount because it is not great. And the third part of our strategy is to focus on making less errors or avoid making mistakes. And this is one of the few sports and this is a privilege that we have in portfolio management that despite making, so many errors, we still end up making, money for our clients. So what that means is that, wherever we invest, we use sizing as a play and we run, high conviction driven portfolio. So if you look at our portfolio building process, typically top 5 to 7 stocks or top 7 to 8 stocks can have, 50% weight. That means that, these companies, we understand the DNA well, and mostly, we have invested with these companies for last decade. So once you know the DNA, obviously you can invest because that in a upcycle or in a down cycle, how these companies are going to fare.